Hi guys, good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me are Sonia Shenoy and Pavitra Pari. Good morning, girls. Looks like a bit of fear of heights, right? We're so close to those peak levels. We've been talking about it for the last 10 days. But as we are getting there, markets are just waiting and watching. They're pausing a bit despite a lot of support coming in from the global markets. Remember, the US markets have closed in the green for 3 consecutive days on the trot. But today, the Indian markets are pretty much flat. The Nifty bank went to those all-time high levels in early morning trade. But since then, it slipped a bit from the top of the trading session. The Nifty itself is close to about 400 points away from its all-time high levels, which stand just above that 18,600 mark. By the way, in an important update coming in from the global markets, the China inflation numbers for the month of October are out, and the producer price index has fallen in October for the first time since December 2020. The consumer price index in China in the month of October has risen by 2.1%, which is less than what the consensus expectations by economists were. So at a time when across the world we are seeing inflation accelerating and at elevated levels, in China, inflation continues to remain under pressure, and it just showcases how weak the domestic economy is. And the fear in the market is that if at any point of time China reopens, then perhaps it's going to fuel global inflation, because right now what's happened is China's domestic weakness has resulted in global inflation being lower than what it would have been otherwise. So even as we get excited about China reopening and having a positive impact on demand, exports, etc., there is going to be that impact on inflation. But right now, the October inflation numbers coming out of China have been weaker than what the economists are anticipating. And that's also the reason why the Chinese economy, the index, is down. If we can pull that up, I think it's down about 1/3 of a percentage point, and Hang Seng too is lower by close to about 1.5%. Hi.
Hi, good morning. Absolutely. A lot of the Asian markets have slipped, like you pointed out. Hang Seng is now down 1.6%. So that is the kind of pain that you're seeing across the Asian markets now. But let's kickstart the show by focusing on some important second quarter results, because we have a lot of those coming through. In fact, a whole host of stocks like MRF, Dr. Lal PathLabs, Metropolis are all under pressure post their numbers. So let's start with MRF itself. Sonia, it really seems to be the margin pressure which is hitting the stock.
Absolutely. And it's very interesting because MRF on one hand has reported weak margins, but CEAT has reported an improvement in their gross margins. So it clearly is an MRF specific problem, and that's something that we're seeing on the stock as well. The margins have fallen 230 basis points for MRF, and if you pull up a trajectory, right, of the last, say, 5-6 quarters for MRF, it's the raw material costs, of course, that have risen about 2 to 3% compared to last quarter. But just look at the margin trajectory. At one point in time, they were sitting at 10% plus margins for many quarters, and now that has slipped significantly. What's going so wrong? Now, the thing is, raw material costs have gone up, so it depends from company to company on how much they pass it on. And MRF has chosen to not pass it entirely to the consumer, and hence their margins are under pressure. So if you look at, if you compare MRF and CEAT, and that's the reason why CEAT is not falling as much, for MRF, the gross margins have declined 580 basis points year on year, while CEAT's gross margins have expanded 80 basis points on a quarter-on-quarter basis, as well as on a year-on-year basis. So it's kind of like a tale of two cities. The top-line growth, there's no problems over there because demand has definitely picked up. But then, a stark difference in performance is what you're seeing between MRF and CEAT today. So just wanted to point that out. But Dr. Lal PathLabs and Metropolis are both under pressure as well this morning. There was some cautious brokerage commentary. We had a chance to speak to the Dr. Lal management, who wasn't too concerned, but nevertheless, the stock is under pressure. Ekta's here with more on that. Ekta.
Thanks for that. Well, if you really did see the P&L and what they reported, it wasn't too bad a set of numbers. It was, yes, a revenue slowdown, but there was a margin improvement, which the street was fearing last quarter. So the Dr. Lal's margins improved to around 26.9% versus 23.4% on a Q-on-Q basis. Remember, same time last year, we had COVID contribution, so it's not really comparable. And for Metropolis also, while the margins came off year on year, on a Q-on-Q basis, there was an improvement which took place. Also, the non-COVID-19 revenue, which is basically what we need to look at now, considering that's the base business and COVID-19 is barely a contributor anymore. Both companies reported an improvement in the non-COVID-19 revenue. albeit which was aided by their recent acquisitions such as Suburban and High Tech respectively. So for Dr. Lal's, non-COVID-19 revenue was up 15% year on year. It was up 7% on a Q-on-Q basis. Metropolis reported some of the highest quarterly revenue when it came to non-COVID revenue, which was up around 16% on a year-on-year basis. But what the street is fearing, and this reason why you're seeing the stocks correct, is the fear of competitive intensity going forward, something both the managements alluded to in their conference call. So going forward with this competitive intensity, what we could see is that patient volumes could probably reduce to single digits. Margins could be shaved off because of higher promotion expenditure going forward for companies as routine test prices are weighed down. Now, brokerages are cautious on the likes of Dr. Lal's, Credit Suisse, Nomura, Morgan Stanley, Antique. All of them have an underperform or a sell call or an equal weight. Morgan Stanley has an equal weight on Dr. Lal's. And the other factor is that with EPS estimates probably being shaved off on account of higher competition in the industry, we do have valuations which will probably come off as well. So you can see that take place. For example, Dr. Lal's is trading on a one-year forward basis at around 60 times. Metropolis at around over 40 odd times. So the street is probably going to, shave off a couple of EPS estimates, and that is going to weigh on the hefty valuations that these companies trade at in any case.
Ekta, thank you very much for that complete picture. On that note, let's also invite the first corporate on trading hour today, and that's Ujjivan Small Finance Bank. They have reported the best return ratios in 6 years in the second quarter. The NBFC has also reported very strong business momentum. The asset quality has improved. To discuss the quarter gone by, we're now joined by Itara Davis, the MD and CEO of Ujjivan Small Finance Bank. Good morning, and thank you very much for joining in, sir. First, wanted to talk about the growth momentum. I believe you've guided for a 30% growth this year. Could you talk about that? What's going to drive it? And also, what's the outlook on MFI loans? Because your MFI loans, both group and individual, as a percentage contribution has risen to 69% versus 65% same time year ago. This compares with a lot of other companies and banks in your position who are bringing down their exposure to MFI. So your thoughts on both, sir?
Good morning, and good morning, Pavitra. It's good to be here. And, I'd like to say thank you to CNBC for covering the Ujjivan story over the last 1 year, where we have seen a turnaround. And as you rightly said, we are now at the top of the spot in terms of our profits. Now, in terms of the business itself, yes, the microbanking business has grown a little bit in terms of the percentage. It is now at 69%. It was 65 last year, but that is the business which has come back fast after the COVID, period. So, and that is the business which we understand very well, and we were able to move in and support the customers who needed new loans, and we were able to take care of that in the last 4 quarters. In fact, last year at this time, we reactivated the whole process with a 100-day plan, which went off very successfully. And we have now 4 quarters of disbursements across the bank, which are all above 4,000 crores. And that is an important mark because, once we crossed that, we were able to maintain a good asset level. And that has helped us all along during this 3-4 quarters. And yes, we are at the top of in terms of profits.
And your guidance of 30% for the year?
Yeah, I think the guidance which we have given for 30% will remain that way. We are confident that we can achieve that.
Okay. The one thing that has improved, Mr. Davis, is the asset quality, not just for you, but for the industry as a whole. Just wanted to understand whether it could get much better from here. If yes, what are the targets? And any stress that you're seeing across the board, across the pockets that you service?
Good morning, Sonia. Yes, I think the most important part of this year's earnings is the credit improvement. The collections on the stressed assets has been very good, and that has contributed significantly. And as you rightly said, that is true of the whole market, of the whole business, the banking industry across. So that is that's a sign that the economy has come back. We were lucky that there was no third phase. And we are happy that the government has managed the situation in the right way and given industry has been very good, especially in this quarter. I think bank after bank is reporting, record numbers, and I think that is an indication of how the industry has recovered during this phase.
Okay, got that. Mr. Davis, on your net interest margins, that is coming at almost 10%, 9.8%. Can you tell us how you expect that to, trend from here? And do you think that eventually the cost of funds could kick in and sort of cause some kind of impact on the margins?
Yeah, the cost of funds is something that is bothering the whole industry. But in our case, we have managed that quite well. From about 10% at the start of the financial year, we are at 9.8. We believe that we will be able to finish the next 2 quarters at least around 9.5 to 9.6, if not at the current levels. And that is because of our business model and our ability to be able to take advantage of the recoveries, because some of the non-performing loans we have had recoveries. And that has helped us to keep the net interest margin at these levels. So overall, I would say that net interest margin is not an area of worry for us. In fact, we have raised interest rates on deposits just a few days ago, in line with the competition in the market. And we believe that in spite of the increase in the deposit rates, which are among the best in the industry today, we will be able to end the year with a very good NIM.
So despite an increase in deposit rates, you're saying NIMs will be maintained at 9.5%, right?
9.5, 9.6, yes.
9.5. You spoke about improving recoveries. Any guidance on the recovery front and the credit cost guidance, if you could help us with that?
No, at this stage, I wouldn't put any guidance on that, because the recoveries are going well. But obviously, as it gets longer away, I mean, most of the portfolio is 365 days plus in terms of the COVID-related recoveries. So it gets a little harder as we go along, but we are maintaining our focus. We are working with our customers, and hopefully, the recoveries will continue, but maybe slightly lower than where they were in the first 2 quarters.
Okay, any fundraising plans that the bank would have?
Not at this stage, because we have completed our fundraising exercise. We have in the second quarter, we have completed the QIP, which gave us 475 crores, and we also raised some sub-debt for 300 crores, all of which has taken our CRAR to 26.6%, which is, I believe, one of the highest in the industry. And therefore, we are in a good position right now.
All right, sir, we will leave it at that. Thank you very much for joining us and taking us through your outlook. So that is Ujjivan Small Finance Bank saying that they will grow comfortably at around 30% for the year. The margins will also be maintained at around 9.5 to 9.6%. So that is the kind of growth that they picture going forward. By the way, the stock has done exceedingly well. Today, it's up 4.5%, but ever since its results on Monday, it's up 16%. So that is Ujjivan Small Finance Bank. With that, it's time for our first short break on the show. But when we come back, we're going to shift focus to the world of commodities. Manisha Gupta will join us for a quick update.
अरे भाभी जी बड़े दिन बाद
मुझे बेस्ट डायमंड ज्वेलरी दिखाओ।
ये एक्सचेंज करा लूं?
बेटा एक्सचेंज में ज्यादा
नहीं, सिर्फ 5% कटेगा।
वाह!
पेश है 95% एक्सचेंज वैल्यू और 90% बायबैक भी। किसना डायमंड ज्वेलरी।
You know, people often ask me why I left my steady job at the call center. I wanted more out of life, so I launched my own startup. Do you want to know how? Then start up your own business as an LIC agent. You want it, we've got it. Great products, zero investment, leading organization, and unlimited opportunities. So are you ready? Now think big. Become an LIC agent.
Visit our website or contact your nearest LIC branch.
बात सिर्फ मेरी नहीं, देश की थी। माइनस डिग्री में भी कॉन्फिडेंस प्लस में रहता था। वो जज्बा आज भी बरकरार है, सही मूव लेने के लिए, क्योंकि अब बात सिर्फ मेरी है।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोज फॉर द इंडिपेंडेंट यू।
अमित जी, देखने में बातचीत चालू है नो मैनर्स बातचीत बिल्कुल जी बातचीत चालू है
I'm a G, loves bigger G.
इक्विटी में इन्वेस्ट कर, ग्रोथ का है चांस।
डेट में है लो रिस्क, बात मेरी मान।
गोल्ड सिर्फ गोल्ड, भैया ने भी यही किया।
सुन सबकी कर मल्टी, मतलब मल्टी एसेट एलोकेशन फंड्स, यानी 3-in-1 फंड। ये इक्विटी, डेट, गोल्ड तीनों में एक साथ इन्वेस्ट करें। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेज ध्यान पूर्वक पढ़ें।
Welcome back. You're still tuned into Trading Hour. The market is currently around 15 points in the red. So from the top of the session, there has been around a 100-point cut that we have seen on the Nifty. The Nifty Bank is the one index which is managing to hold in the green, but that has also slipped significantly. It's up just around 115 points right now. But let's talk about the commodity space as well now. Manisha joins us, and today she's looking at crude. Manisha.
Pavitra, thank you for that. Well, after 3 days of gains, today has been a day of profit-taking for many commodities, including crude prices also, which have come off their 2-month highs. The reason for the profit-taking also is as China reaffirms or reiterates that they are committed to their zero-COVID policy, and the restrictions will continue to be quite stringent. Then you have seen rise in U.S. crude inventories as well. Markets were anticipating a 1 million barrel of an increase. You've seen 5.6 million barrels of an increase coming in there. And then it also has been about the Brent as futures increasing trading margins, the initial margins that is, by nearly 5%. That also has led to some people squaring off their positions and getting out of the market. That led to some price decline as well. And then there was an EI report telling that for the next year, the kind of global demand growth that they are looking at is expected to be on the lower side. So if this year you have seen demand growth at 2.26 million barrels per day, next year is expected to be lower at 1.16 million barrels per day. So that tells you that the demand growth is not going to be even as we head into the next year. Having said that, markets do believe that the support will continue because you're still looking at US looking at putting sanctions, including European Union as well, on Russian oil from 5th of December. Markets have seen low gasoline and distillate inventories in US as well. Actually, when you look at the US distillate inventories for the month of October, they are the lowest since 1951 in a month of October. So these are the factors that are supportive and is the reason you have the prices still holding above $95 per barrel.
Okay, thanks Manisha for that. Well, the space to be in this morning undoubtedly is PSU banks yet again. Just look at them soar right now. Union Bank, in any case, was up 8%, but the volumes are huge on Union Bank this morning. It has IDBI Bank for company, there's PNB, Bank of Maharashtra. That whole lot is seeing substantial volumes. In fact, over 1 crore shares now traded on Bank of Maharashtra, over 4 crore shares traded on Union Bank. It's huge, the kind of volumes that are being traded in the PSU banking space. Let's slip into a short break. We'll continue chatting about the finance space in general. There's a new IPO opening up today. 5-Star Business Finance is open for subscription. More details coming up. We'll also be joined by the management to discuss their plans going forward.
What is the current status of our cyber robbery?
Little bit playing tricks.
Alluring them a little bit.
Tempting them a little bit.
After that, their all money will be ours.
Our little awareness can stop their laughter and cunning tricks. Do not use unauthorized apps, unknown links, and don't allow unsecured Wi-Fi connections. If something wrong happens, report the matter immediately on helpline numbers.
आग को फैलने से रोकना मुश्किल है पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
आज ध्रुव के स्कूल से फोन आया, कहने लगे कि फीस भरो वरना कल से स्कूल आना बंद। क्या कहती हूँ कि बाप की गैर जिम्मेदारी की सजा बेटे को मत दो। तुम तो टर्म लाइफ इंश्योरेंस लिए बिना ही चले गए।
PolicyBazaar.com पे 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 430 रुपए महीने से शुरू।
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
कंस्ट्रक्शन बहुत तगड़ा है।
क्या भाई साहब, जो साइट विजिट ना दिखाए 99 acres बताए। घर लेना हो या बेचना, एक्सपर्ट से ही पूछना। 99acres.com।
This festival, bring in Nissan Magnite. Big on dreams. Bold in passion. Beautiful in every drive. Rush to the nearest Nissan dealership now.
Welcome back to Trading Hour. As we told you earlier, it's really the banking space that's zooming right now. So any PSU bank you pick, you would have got it right this morning. Mitesh Thakkar of earningwaves.com joins in now for a quick technical chat. Mitesh, hi, morning once again. It's the day belongs to the PSU banks, it seems. Tell us, what do you do now? Do you take profits here? Do you let your long positions run, particularly for PSU banks? And what is the strategy for the rest of the day?
So I think taking profits may not be the best idea. I think they're slightly overbought, but I still believe that the structure is very positive for most of the banking names, particularly stocks like Canara Bank, Bank of Baroda, PNB, etc. And I think there'll be more upsides to happen over here. The odds are clearly favoring that. So I think I would just suggest to trail the stop losses to today's low as the trading level. And as long as that is not being violated, good chance that we'll see about 8-10% still trading upside happening in most of these names. Having said that, in fact, I have AU Bank as one of my trading calls. It's a buy with a stop at 630 or just below it, and a target of 675 can be looked at on the upside. While Berger Paints is a sell with a stop at about 600 for targets of 570.
Thank you very much for that. Now let's turn our attention to the primary market. The IPO of 5-star Business Finance is open for subscription. The offer is a complete offer for sale of more than 1,900 crore rupees. My colleague Abhishek is here to get us up to speed with all the details. Abhishek.
Well, Rima, as you mentioned, the IPO is entirely offer for sale from the existing shareholders. So the issue period is between 9th of November to 11th of November. The total fundraise is of about 1,960 crores. The price band is about 450 to 474 per share. So the valuation based on Q1 FY23 book value works out to around 3.6 times, the price to book value multiple, which is slightly on the higher side when you compare to other listed peers. So there has been positives from the IPO, given the fact that this company has net interest margin of more than 10%. They cater to under-penetrated segment in India, so the scope for growing ahead is also visible. There are very highly capitalized at around 70%, so there won't be frequent equity dilutions for fundraising over the next, let's say, even 5 years or 10 years. The risk over here is that the return on equity can remain capped, given the fact that leveraging the balance sheet will take time. Risk weight to AUM ratio, now that's been increasing, so the risk that they are taking for incremental loan growth is actually increasing. Valuations are slightly expensive, so there are low chances of re-rating for this candidate, and any RBI intervention that can actually impact their business will be taken negatively. Back to you.
All right, Abhishek, thanks a lot for explaining that to us and taking us through the issue details as well of 5-star Finance. But to understand more about the business, the plans going forward, and what the numbers could look like, we are joined by Lakshmipati Deen Dayalan, who is promoter, chairman and managing director of the company. Mr. Deen Dayalan, good morning and thanks a lot for joining us. This is Pavitra. I'm going to get to all of the individual numbers in just a bit, but I have to start by asking you about the valuations. At 3.5 times price to book, this is an expensive issue, and considering the fact that your ROE is looking the way it is, and the fact that, like Abhishek was also just mentioning, it could remain quite capped, could you take us through why you think this valuation works?
Good morning all. Thank you for having us in CNBC-TV18. Before talking on the valuation, let me take you through how uniquely 5-star is positioned in the underserved market. We all know India is the land of million shopkeepers and millions of self-employeds. In these shopkeepers of self-employeds, the first port of credit is being today served by the moneylenders. That is where 5-star goes and disturbs the moneylender market, which is very, very huge. There is a study which says 2 out of every 3 people whom I mentioned, their credit is being met by informal lenders like money lenders, friends and families. That is where 5-star goes and taps the market. We have given the study in our DRHP, which talks about the market opportunity of close to 22 trillion in our country. I think that is where 5-star is now heading towards. So keeping that in mind, and second point, we have been doing this for last 20 years. We have not started this journey a few years back. We have been doing it from 2002. By the way, this is my 20th year in 5-star. So when I joined 5-star, we moved from lending to vehicles towards this segment, which was considered most riskiest in those times. So 5-star took a chance, underwritten the risk well. In last 20 years, if you see our data, both in growth, will come in profitability and quality. Last year, we made close to 450 crores of PAT. And first quarter of this financial year, we made close to 140 crores of PAT. With one of the best asset quality when you compare with our peers.
So,
keeping the
Mr.
opportunity.
Deen Dayalan, sure, we got that. We know the historic data, but I guess, you know what, the big question now is there's so much competition in this space, especially from some of the more well-known or larger brands, if you'd want to call it, whether it's the Shriram Group, you have, you know, AU Small Finance Bank, Avas Financiers, a whole load of people in this space now. So this growth that you've seen, right, your AUM's currently at about 5,100 crores. Over the last 4 years, you've seen about a growth of 50% compounded. Is it something that you can sustain, or do you think competition could keep a lid on the growth in the future?
Definitely, we can sustain whatever we have did in past. I can't give a forward-looking statement today, but what differentiates us with the names, what you said is very clearly two factors. One is the ticket size. Our operating ticket size is between 3 to 5 lakhs. Our sweet spot is between 1 to 10 lakh. The names what you mentioned, their ticket size at least would have been 2x or 3x of the ticket size what we cater to. That is the specialization I was trying to say in earlier question. Thus, that creates more value as 5-star gets into the IPO market, because we are the niche players in this segment. Just to brief you what Sundaram Finance did in 1960s and 70s, what Shriram did in 1990s, we have been doing it for last 15 years. So that is the niche and the differentiated approach what we are taking to the mass segment.
So fine. So your right comparison may not be an AU Small Finance or the Shriram Group, where the ticket size is a lot larger. But now with the advent of technology, sir, we've seen so many startups who are trying to cater to the underpenetrated segment by offering loans. And these startups have been mushrooming, you know, for like every alternate month, you've got a new one who's trying to get into this whole fintech, payments, loans segment that you are operating in the last 20 years. So do you not think that, you know, going ahead, the competition is only going to increase, and these companies are using a lot of technology and they may be able to offer the same loans perhaps at a cheaper rate? So the short point is, say, over the next 5 years, if you could give us a sense, do you think NIMs can sustain at these levels, or do you think with technology it's going to start coming down? And even the investment plans as you expand beyond south of India?
It's a right question. I think people have to understand very clearly how we operate and where we operate. So the so-called tech names, what you said, they are operating in tier 1 and tier 2. Our main focus will be in tier 3 to tier 6 market. That's our footprints are. Close to 95% of our branches are being predominantly in tier 4, tier 5, tier 6, where the technology penetration is not in a big way, like what you see in tier 1 and tier 2. This is the first differentiation. Second one is the technology, the fintech guys, they operate in a different space. They provide you a working capital loan close to 50,000 rupees or less than 1 lakh for a shorter tenure of say 3 months to 6 months. Whereas in 5-star, we provide for them for a business setup, right? Business setup costs somewhere around 3 to 5 lakhs, or improvement in business setup cost around 3 to 5 lakhs. So our ticket size is 3 to 5 lakhs, and we give a tenure close to 5 years to 7 years. So I think that's the differentiation, both where we present and how does our model gets differentiated between this technology. Third is, I think everyone agrees, the lending is, the art of lending is not growing your asset, keeping your quality and profitability on the right path. I think 5-star has set up very clear collections setup for last so many years that has given a best asset quality and profitability out of the assets what we create. I think these are the big differentiation I see. I don't see any competition building in tier 4, tier 5, tier 6 city in near future.
And any plans to expand beyond south of India, and would it require significant investments on your part which could pressure the business?
No, our business model capex is very light. To open a branch, we may need less than 10 lakhs as a cost that will incur. As of today, Five Star's branch presence is close to 95% in South India. We want to be a South Indian player for a short term. But having said that, we are putting our branches in some central and northern states like Maharashtra, Madhya Pradesh, and Uttar Pradesh. If you want to say a long-term view, we want to be present around 10 to 15% in non-south, but predominantly we want to be in the south-based lending, where the market is huge, the collections are stable, the income levels of the people are going.
All right, we will leave it at that. Thanks a lot for joining in and taking us through your business. That is the Five Star Business Finance. The IPO opens today. Let's slip into a short break. Up next, we'll discuss the market fundamentals with Swati Kulkarni of UTI Mutual Fund. Stay tuned.
This festival, bring in Nissan Magnite, big on dreams. Bold in passion, beautiful in every drive. Rush to the nearest Nissan dealership now.
Can someone working alone solve all the world's biggest challenges? Isn't collaboration the way we'll make lighter, more sustainable packaging and generate limitless energy? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
We all have something deep within us, something that's worth gold. So go ahead, show your grit, and celebrate your essence with gold. You are precious. You are bold. You are gold.
Welcome back. We're off about 115 points from the top of the trading session. So as we speak, we are down close to about 20 points. But after opening closer to that 18,300 mark, the markets have been slipping. Swati Kulkarni, the Executive Vice President and Fund Manager at UTI Mutual Fund, now joins in to talk about the market fundamentals. Swati, morning, and thanks so much for joining in. This is Rima here. We're still very comfortably positioned above that 18,000 mark for our own markets. We've been talking about this great outperformance vis-a-vis the global markets. You know, the last time we were at 18,000, which is close to about a year ago, the texture of the market was very different. The leadership was different. It was all about the IT, while banks had taken a back seat. Now, when we're at 18,000, you know, IT stocks are right at the bottom of the pyramid. You know, names like Wipro, Tech Mahindra are still down 40-50% from its all-time high levels, while banks have been soaring. So as you look ahead into the next 1 or 2 years, where do you think the leadership for the market is going to come from? Because the leadership mantle keeps changing.
Yeah, thanks, Rima. Actually, this has been the nature of the stock market. So, you know, rather than looking at what could happen, which leaders would emerge, I would say at this point of time, we think that automobiles, banks, and telecom are likely to lead the earnings growth. And therefore, I think these are some of the sectors which are likely to outperform. As you said, IT, yes, has been an underperformer for last 1 year, or actually more than that, 2 years. But valuations theirs are also getting attractive, and therefore, you know, I wouldn't write off that sector as yet. In fact, that if the concerns that are emerging about the global slowdown and the IT budgets getting postponed, probably is incrementally getting reflected in the valuations. So we would be watchful about that space as well.
So Swati, good morning. When you say banks, right, what do you do with PSU banks? Because clearly the earnings trend has improved for PSU banks. Loan growth has been strong, asset quality has improved. But this is a space that has not given great returns to long-term investors. Are things going to be different this time around?
Yeah, Sonia, what I feel about generally the banks, particularly, we are entering into a liquidity tightening situation, and therefore deposits are something which is likely to, you would see deposit rates likely to go up as credit growth improves. Banks will have to look at deposit growth, and that will lead, deposit rates going up, and the NIM expansion, net interest margin expansion that we have seen in the reported quarter. I think that would be temporary, and where you have seen the repo linked or loans getting repriced, but the deposit side, the liability repricing is yet to happen. So from that perspective, I think the sustaining these kind of performances may be a thing which we need to be watched out. We need to be vigilant about. And as you said, yes, there are cases where the below price to book multiples that some of the PSU banks were quoting, they have now inched up to closer to a book. So therefore, I think our preference will remain into the private sector banks, which are rich in terms of the current account and savings account deposits, because that will give them the advantage of low cost of funds, as well as the capital adequacy where that is strong. So that focus continues, and we have an overweight position on the private sector banks.
All right, overweight on the private sector banks. Swati, you were also mentioning the auto space as one that you like. Can you tell us what way you would approach this? Do you look at the passenger vehicles? Do you look at, say, the two-wheelers, or would you play the EV theme? How do you sort of approach this space?
Yeah, Pavitra, the thing about automobile sector is here, we think that we are likely to see volume growth, and that is likely to lead to operating leverage benefits. Our bets are on the, the personal vehicles, basically the PV side, as well as we are looking at spaces where there is the penetration levels are low, like higher CC bikes, for example. And the thought process here is, apart from the operating leverage benefits, is that the the volumes have not yet reached the levels of 2018, and therefore the margins have substantially eroded in the sector. We could see the margins inching back as the supply side issues get addressed and the raw material prices come down, as well as the volume growth can pick up. So these are some of the things that we think that the long-term drivers for automobile as a sector, as our aspiring population, the working age group, which is going to support for many years, is something which is auguring well for the sector. Yeah, you said EV risk is definitely there, but at this point of time, that is more on the two-wheeler, where mass two-wheelers, we are underweight.
Swati, would you take money off any particular sector to invest in the sectors that you like? Have you? Yeah, go ahead.
I think more than taking off the money from sectors, I would say that it is up to the stance that we have taken about being underweight on metals and energy being global cyclical. That would continue, and we would be more patient about our investment in some of the consumer discretionary names, because we think that they have still not seen the uptick that is expected. And as we think normalization of inflation and as the general economic improvement happens, here there is a solid argument about the low penetration levels, premiumization opportunities, as well as the distribution expansion that would be a catalyst, long-term catalyst for these sectors. So I would say, rather than taking out money from somewhere, it is going with the conviction that we have at this point of time.
One space that has come back into action in a big way is this whole agrochemical space, right? I mean, referring to some of these big names like PI Industries, which are clearly which is the stock of the day. I mean, it's up almost 12%. Do you see merit in putting more money to work here, Swati, in this space?
Can you repeat the question? I had a loss of connection for some time.
Sure. I'm talking about the agrochemical space, right, where we've seen significant traction, especially in some of these larger names like PI Industries. Do you see more merit here?
It will be difficult to comment on stock specific, but that is one area where we will have to be, as generally the awareness is going up about utilization of even in terms of fertilizers, as well as having right kind of
Oops, I think there's an issue with your video. So we're going to just wrap it up on that note. Thanks a lot, Swati, for joining in. By the way, look at PI Industries zooming away right now. Sonal was telling us earlier in the day that it's been a very strong performance, over a 30% growth that PI Industries has seen in its top line. Margins have improved. It's ticked all the right boxes. Let's slip into a short break. When we return, we'll have BR Preetham of Sansera Engineering to discuss the company's second quarter earnings and the road ahead. Stay tuned.
This festival, bring in Nissan Magnite, big on dreams, bold in passion, beautiful in every drive. Rush to the nearest Nissan dealership now.
कभी सोचा नहीं था कि डॉक्टर फैमिली से होकर भी एक आर्टिस्ट से शादी करूंगी।
वैसे डॉक्टर को वाइफ बनाना भी एक आर्ट है। अरे
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। Independent flows for the independent you.
To make my vision a reality, I have to see clearly from every point of view. With my Verilux progressive lenses, I seamlessly transition from near to far and see every detail in sharp focus. When you see no limits, there are no limits. Verilux lenses by Essilor.
Welcome back. Sansera Engineering is the stock on our radar right now. Well, this is a fairly new listing. It listed on 24th September of 2021. It listed at around 811 rupees. So just pull up the chart for you of Sansera Engineering. The problem, it's 745 now, so it's below its listing price. The issue price was 744, so it is right there at the issue price. The problem has been that the revenue growth is very strong, but it's the margin contraction. Margins have contracted as much as 300 basis points, and the international business for them has been under pressure purely because of the challenges there. Also, debt has been rising, so that's a bit of a concern. BR Preetham, who's the Group Chief Executive Officer of Sansera Engineering, joins us now to talk about that. Sansera, as we know, supplies both to the auto and the non-automotive segments, so they are one of the top 10 global suppliers of connecting rods. Mr. Preetham, good morning and thanks for joining in. I just want to start by asking you about the margin performance itself. Do you think that there could be more pressure in the second half of the year? The margins, in any case, this quarter were down about 300 basis points. And what do you see as the operational performance going forward?
Yeah, morning, and thanks for having me on this show. There has been a margin contraction on Q2, but primarily it's due to, the lag effect of the raw material price increase, which was accounted for in Q2, which was primarily between Q1 and Q2. So I would say that while the commodity price increase has been accounted here, there is a effect of contraction in exports also, which has contributed to that. But going forward, we expect that our export revenues will be quite strong in Q4 onwards, because that is what is the indications that we have, and we do not expect any more increase in the commodity prices. So this should be at level with which we should be operating. In fact, Q4 onwards, we should see expansion in our margins.
When you say expansion in your margins, right, if you pull up a 4-year chart, and just going by your own presentation, you did about almost 19% margins in FY21. When can you get back to those levels?
No, we do expect that, as you are aware that the two-wheeler industry, which we have significant presence in, has been going through rough times, and we are just seeing a bit of a recovery in that segment. This also would significantly contribute towards our revenue and our margins. So we see that as our two-wheeler segment is improving, we have new products which have been added in XEV and hybrid components. Our aerospace business is back on track. So with a better utilization and exports coming back, we should be really looking at a better margins. We have always said our margin profile will be between 17 and 20%. So we expect that as the utilization goes better, we should get back to those levels.
Okay, so 17 to 20% continues to be the margin guidance for Sansera Engineering. Morning. So your H1 revenue growth was very strong at 25%, but we also know that the first half of the year, same time last year, was impacted due to COVID, which pushes up the growth rate for the first half of the year. Could you give us an indication of how the second half of the year, H2 FY23 revenue growth will look like, and break it up in terms of domestic, exports, the auto space, non-auto, EV, any color that you could provide us on demand for the next 2 quarters?
Yeah, you are right. Q1 of last year had an effect of, COVID, but then Q2 was very strong last year. Overall, we have seen a very healthy increase in our revenues in H1 this year. We continue to see that H2 also we will grow. This is primarily fueled by our new component. We have commenced our production for our hybrid components. XEV customers have our businesses now got into mass production. We have also added a couple of key customers like Tata Motors, Force Motors, Volvo Eicher. All these production has started. Aerospace has come back. So we definitely see that H2 is also going to be very healthy growth for us. And we have always maintained that we would grow at least 10% better than the industry. And I would like to, re-emphasize that we will be on that track.
Okay, sir, could you help us with some numbers? It was around 1,200 crores in the first half. If you could take us through what kind of figures you're expecting on the revenue for the second half, because you also did mention that the exports will pick up in Q4. So taking that into account, what could Q3 and Q4 to get?
I really can't give you a forward guidance, but what we expect is overall our growth for the entire year will be in high teens. So we will grow in high teens for the full year.
Okay, grow in high teens for the full year. The other issue that I guess investors are also concerned about is the rising debt. So when your IPO came out, your debt was around 440 odd crores. And right now, as per your presentation, the net debt has risen to 625 crores. Are we looking at more escalation in the quarters to come?
You need to, while our absolute debt has improved, but our ratios have improved much better. So while our business is growing because we are on a very aggressive growth path, our debt to equity ratio has come down to 0.56. So while there is a growth, so there is also requirement for investment. So we have invested close to 250 crore plus last year. Similar amount is being invested this year. All this is going into new technologies like aluminium forging components, XEV components, into new facilities for aerospace. So we are very, very bullish. Our order book is also healthy. I'm sure that investors do understand that this is a growing business and it needs capital.
When do you think your EV contribution can rise to 10% and plus, sir?
No, see, if you look at our new order book, we already have 18% of our business coming from XEV related components. So while we anticipate that two-wheeler in India is going to be aggressively towards EV, where Sansera stands to get benefited, we have already added 6 customers vis-a-vis 4 in ICE scooters that we had in this thing. So content per vehicle is also higher. So we do expect that, last quarter we have reached 3% of our turnover coming from XEV, which was not substantial, but then directionally it gives a very positive outlook.
Okay. All the best. Thanks a lot for joining in. And speaking to CNBC-TV18, that's Sansera Engineering. Hasn't done much for investors. In fact, it's exactly at the issue price, despite being over a year of trading since it debuted on the exchanges. But let's do one thing. Let's slip into a quick break. The market has moved briefly into the red. Nothing alarming, but there's a red tick on the screen. We'll get you more on the markets on the other side of the break. Stay tuned.
इनको अपना शो दिखा दे।
Welcome to this world famous show.
Hey, Messi. What?
FIFA World Cup begins. Mbappe moving with the ball. Ronaldo!
फुटबॉल वर्ल्ड कप 20 नवंबर से जियो सिनेमा पे, इससे बड़ा कुछ नहीं।
I like it. Play it your way. Play it your way. Sarah, this is your space.
Play it your way.
With the versatile range of sanitary ware, faucets and tiles by Sarah.
Hurry, hurry.
Will snow days be a thing of the past? Or are we smarter than that?
To make my vision a reality, I have to see clearly from every point of view. With my Verilux progressive lenses, I seamlessly transition from near to far and see every detail in sharp focus. When you see no limits, there are no limits. Verilux lenses by Essilor.
Welcome back. You're still tuned into Trading Hour. For the market, we're seeing a cut of around 10 points, but there's absolutely no kind of decline that you've seen in the PSU banks. That index is now up almost 2.8%, and a lot of these individual names doing well, the likes of Union Bank, you have something like an IDBI, PNB, all seeing good gains come through right now. But let's actually talk about some important results which are due today. Tata Motors is going to be the big one to watch out for from the auto pack. So Sonia, tell us what we can expect. Good quarter?
It's a good quarter for Tata Motors, largely because of the low base that it comes out from. You also have an improvement in the semiconductor supplies, as well as an improvement in both the passenger vehicle and the commercial vehicle space. Now, there is operating leverage as well because of lower raw material costs, and that will aid the numbers this time. There's a strong growth in the India business because of a growth in both passenger vehicles and commercial vehicles. We've seen the success of the new launches like the Tata Nexon. The electric vehicle space has been doing well. JLR volumes will also improve because of a sharp improvement in the semiconductor supplies. So both year-on-year and quarter-on-quarter, quarter, we're looking at a good improvement. For JLR, it's a 30% growth in the volumes at 102,000 units. The India business passenger vehicle volumes are very strong, up almost 70% year on year, while the India business margins will also improve because of the price hikes that were undertaken and the operating leverage. We also have a higher mix coming in from China in JLR volumes, and hence the numbers will look good. So how do the key numbers stack up? Revenue growth of 32% is what we're looking at. The EBITDA will more than double because of the low base of last year, and the margins will improve to double digits versus about 6.6% same time last year. There was a loss for the last many quarters, and this time around we're expecting a profit of 248 crores, but it's very, the range is large because of the forex element that Tata Motors generally has. So the profit after tax number could vary a bit depending on what the forex element is, but largely this is an improvement that we're expecting to see in the earnings performance for Tata Motors. But as we wrap up on the show, we've run out of time, but we'll leave you with some important market opinion. We spoke with Krishna Kumar Karwa of MK Global, and he's been bullish on the markets by and large, but listen in to the sectors that he likes and the stocks that he thinks could take up leadership in the next leg of the rally. Halftime report comes up next.
Optimism is at very strong, and we are almost as an index level, we are almost near the 52-week high. And this is obviously a function of robust corporate performance and robust government policy, which augurs well for the coming 3-5 years also. Now, trying to time the market is very, very difficult. We have seen that despite $22 billion worth of selling by FPIs over the last 11-12 months, our indices are back to its peak. In June, we were something like 15,000 odd, 15,500. From there, we have recovered. So I would imagine that it's better that investors focus on bottoms-up investing and stay invested from a medium-term perspective. Banking continues to remain robust, and from a next 2-year perspective, investors should at least get 15 to 20% compounded returns. But I think within that, if you look at your large private banks, if on a 1-year basis also have delivered almost like 15% returns. But it's the public sector banks which have delivered stellar returns of, say, almost 30 to 40%. And going forward also, whenever a sector is in tailwinds, it is the tier 2, tier 3 participants who possibly will give superior returns. So aggressive investors should look to be investing in public sector banks or even tier 2, tier 3 private banks, where possibly the returns could be much more stellar.